Hello. Everybody, welcome to Froggy Stocks. Nothing I say is financial advice, entertainment purposes only. Going to do the Gary Gensler call here pretty soon.
I don't know if you want me to send you the screenshot.
On Redbox?
Yeah.
Yeah, I'm staying away. I see what's going on with Redbox. It's obviously moving.
I'm just
why
really
you got a
confused.
$19 purchase?
Yeah, that's why I'm really
price?
confused. Yeah.
I couldn't tell you, man. What broker are you using?
Fidelity. And I routed the first two to IEX. The first bunch I kept getting verified canceled. Then I did a limit. I got 2 through IEX, then 2 through auto, and then 1 through IEX. But they all say, if I click on them, they say, cost per share, $10.25, $10.30, $10.19. But my overall thing is average cost of $19. And then when I go to my tax lot to see what the average cost on there is, it says each one I purchased was $19 a share.
I'd be calling them sons bitches right now and asking how you got that purchase price and tell them they need to fix it.
I did, and he had no answer for me. And then he basically asked me, why am I in Redbox? What makes me think I should be in this sort of company right now?
I hate when them fuckers do that, man.
It literally just made me hang up because I'm like, okay, what the fuck?
I think these brokers have multiple people answering the phones, of which I think some of the broker calls are going out to other institutions, in my opinion, because I've gotten people from Fidelity that literally made me want to drive to the building to just slap them. But I would keep calling Fidelity.
He seemed a little too fucking in the know.
Yeah.
To be working at Fidelity. I don't know.
I'd be calling Fidelity and telling them they better fix your cost average on that stock like immediately, though.
Hey, Evan. Hi, guys. Did you sell any of those shares at any time and then rebought again?
I don't remember, but I am like, is that a wash sale? Is that what that may be?
So if you bought and then sold for a loss and then bought back in at a lower price within 31 days, they will average the price, your original cost basis. So you won't have a cost basis of what you bought for. Both of the cost bases would be averaged.
Did Redbox ever go above $19 a share though?
Not that I'm aware of. Maybe it hit like the 17s or something last November.
If you never bought above $12, then you should be nowhere near a $19 cost average, even with a wash sale.
Yeah, and that's true too. Good point, Spence.
I think it's all fucked, man.
Me too.
All of it, bro. Fidelity kept telling me, let me take this to the back office. And I was like, wait, well, hold on a minute. So why did you guys start putting me to the back office all of a sudden?
Fuck. Jess, do you want me to send you a screenshot? Do you want to see what I'm looking at?
Yeah, I would love to see that. And I just gave a quick 6-month scan on Redbox, and it never went anywhere near 19. Yeah. And so you would have to have bought it at 19 and sold it within 30 days. Last 6 months is nowhere near that. So, yeah, something is definitely wrong. If you want to send me screenshots, I'll be happy to look at it.
Yeah, you can kick one to me, too, if you want.
Yeah. I fucking, put, boxes and circles around everything,
Cool. Make sure your account number and your socials on it. That way.
So I also wonder if there's different prices for IX for months.
Oh yeah, I actually sent you my account number, Spence.
Hey, Gary Gensler's on now, guys. Guys ready? Give me 10. He's just sniffing a lot. It just paused again. All right, you guys can go ahead and talk some more.
Is there on IX? I remember being blocked because I was buying under a lot of 100. So I wonder if there's some kind of different fee for lots smaller than 100. Could that be?
I mean, if you're buying a market price stock, you should get best exit. There's something funky going on today. I'll tell you that this week. I fully expected AMC to already drop back off past 13. I hope what Gary Gensler is going to say is, yes, we're going to ban payment for order flow. I doubt that's what it is. But if institutions, market makers like Virtue and Citadel are now panicking because they're going to lose their revenue stream, or brokers like Robinhood, 70% of Robinhood's revenue was payment for order flow. So if they change this up, Robinhood's going to go fucking bankrupt.
Hey, Spence, Hood just broke support at like 860. I'm telling you, I'm going to make bank on these puts.
Good for you. Yeah, if they don't have revenues and customers, they're going to go bankrupt. And when they do, all the bad debt they accumulated over these plays, can you imagine what's going to happen with that? That's going to flow through Citadel like crazy. It's still just sitting there frozen for some reason. Let me refresh, I guess. I think they said 10 minutes. I don't know why.
25% of U.S. equity volume. Last year, during the meme stock events, that share swelled to a peak of 47%. So from 1 quarter to nearly half. What's more, thinking about retail, the retail public, and particularly retail marketable orders, 90+% of retail marketable orders are routed to a small, concentrated group of wholesalers that pay for the retail market order flow, and institutions around the globe aren't competing. It's that small group of wholesalers. So it's not clear with such market segmentation and concentration, and yes, with an uneven playing field, that our current national market system is as fair and as competitive as possible for investors. And in a recent report last year, the SEC walked through that meme stock events of January of 2021. And the staff described 4 areas to consider of interest in promoting our 3-part mission. Investors on the one side, issuers on the other, and then fair, orderly, and efficient markets in the middle. To date, the commission has released 2 proposals regarding 2 of those. I'm not going to discuss those today: shortening the settlement cycle, the plumbing, and also enhancing short sale disclosures. A third thing in that report from last year was about digital engagement practices, what some people might call gamification. We put a request for comment out on that in the fall. Today, I'd like to focus on the 4th aspect that was in that report, and that was about trading in dark pools and through wholesalers. We have not updated key aspects of our national market system rules, particularly related to order handling and execution, since 2005, 17 years, a lifetime in equity markets, and even, Rich, for you, a lifetime in Piper Sandler conferences. I think then it was Sandler and Neal conferences, but maybe it was a firm even before that for you. So last year, I asked staff to take a holistic cross-market view of how we could update our rules to drive greater efficiency in our equity markets. Helps investors, helps issuers, if the middle of the markets are more efficient. That which you cover each year in these conferences. I'd like today to discuss work across 6 areas: minimum pricing increment, national best bid and offer, disclosure of order execution quality, best execution, order by order competition, and payment for order flow and related exchange rebates and access fees. So let me try to do it quickly because I know, Rich, you're going to have a bunch of questions. Minimum pricing increments. Today, we lack a level playing field amongst the different trading venues: wholesalers, dark pools, lit exchanges. There are many disparities between these 3, but particularly let me mention something about tick size. In the lit markets, investors see prices in 1 penny increments. We're familiar with it. Rich, you and I grew up when it was wider. Wholesalers, though, can fill orders at sub-penny prices and without open competition. Not level. And more than half of the share volume in the first 5 months of this year was in stocks constrained by tick size. I'm talking about on these exchanges. And in contrast, sub-penny trading, including a tenth of a penny, so 1/10 of a penny, accounts for 37% of the share volume executed off exchange. You really wonder why this lit exchanges should have that 1 penny constraint when the off exchange does not. It raises real questions about whether this structure is fair and best promotes competition. Why not allow all venues to have an equal opportunity to execute at sub-penny increments? Therefore, I've asked staff to make recommendations for the Commission's consideration around leveling the playing field with respect to 2 facets of tick size. First, possibly harmonizing the tick size across different market centers, such that all trading occurs in the minimum increment, regardless of market center. Second, given the sheer volume of off-exchange sub-penny trading, as well as the currently allowed on exchanges, retail liquidity programs go down to 1/10 of a penny in these RLPs, possibly shrinking the minimum tick size to better align with that which is happening off exchange. So that's first, tick size, leveling the field. National best bid, best offer. The NBBO, as it's called, is a quote designed to aggregate information across the different exchanges. It provides investors important pre-trade transparency, and then those shares are subject to what's known as the order protection rule. I've asked staff to consider 3 issues related to the so-called NBBO. And the question is really, what's included, what's excluded from the NBBO? Is it a good measuring rod? Is it not a good measuring rod? So first, the NBBO currently includes only what's called round lots, as you know, quotes of 100 shares or more, has for decades. That seems to leave out critical gaps. Staff calculations using trade and quote data found that odd lots, less than the 100, increased from about 15% of trades in 2014 to more than 55% of the trades in March of 2022. This has a lot to do with the transformational times we live in technology and what's going on. It also has to do with some average share prices moving up. Retail investors, the very investors who are more likely to buy and sell at odd lot prices, are unable to see the prices. Sophisticated folks can see the prices of the odd lots more readily, but not the retail public. And in 2020, the Commission adopted something called the Market and Infrastructure Rule, which was recently upheld in court, I might note. And this rule created a new round lot definition, which, depending upon share price, the round lot could be between 100 shares and 1 share, had increments. It also added odd lot information to what was called the core market data. So under the transition schedule, under that infrastructure rule, though, the implementation of the new round lot could take several years, maybe even many years. And therefore, I've asked staff to consider whether we go out, notice and comment rulemaking again, and accelerate the implementation of this new round lot definition. The infrastructure rule also included quotation information about the remaining odd lots, even those odd lots less than the 40 or 20 or 10 of the new definition of round lot. So I've asked staff whether we should consider also accelerating that information about odd lots into core data. Together, I think accelerating both of these timelines would allow retail investors to better understand prices sooner. But there's a third thing I want to say on this, is I've also asked staff to consider whether there should be an odd lot best bid and offer so that investors would know the best price available in the market regardless of share quantity. Third, disclosure about order execution quality. You might be familiar with a rule that's been in place for about 20 years that allows retail investors to understand and compare execution quality across these market centers. But today, retail investors cannot compare execution quality across brokers. Yes, for market centers, but not their brokers. And that's because this so-called Rule 605 only covers market centers like the dark pools, the wholesalers, and the exchanges. Moreover, the rule is 20 years old. So I've asked staff to make recommendations on how the commission can consider we might update this. 22 years is a long time in these markets, and that investors could receive more useful information that could include mandated that broker dealers, along with the market centers, file some monthly reports on 605, and further, that there be some consideration given to requiring all reporters, market centers and broker dealers to provide summary statistics of execution quality, such as price improvement as a percentage of the spread. Fourth, let me talk about best execution. You might be familiar with it. Right now, the Financial Industry Regulatory Authority, FINRA, the MSRB, the Municipal Rulemaking Board, have rules on best execution, but we at the SEC actually do not. These FINRA and MSRB rules require that broker-dealers exercise reasonable diligence to execute customer orders in the best market so that their customers, not them, but their customers receive the most favorable prices under those prevailing conditions. I think investors might benefit if the SEC also considered proposing a rule about best execution. And in addition, broker-dealers and investors might benefit from more detail around the procedural standards. See, FINRA, MSRB, 22 years later, there's been a lot of questions. So why not provide better details on procedural standards brokers must meet when handling and executing customer orders? So I've asked staff to consider that as well. And not just for equities, but for other securities. Best execution, whether it's in corporate bonds or elsewhere. Fifth, got a little press, I guess, this week. Order by order competition, I want to talk about. Competition promotes efficiency in markets. We know that, but it also sort of takes away potentially some economic rents or excess profits above market competition that might otherwise accrue. And yes, Rick, it might be some of the people in the audience. There's a trade-off. Investors and issuers benefit if there's less economic rents in the middle, and there's sort of the full benefits of competition transparency in the middle. So as I've mentioned, the vast majority of retail marketable orders are flowing to wholesalers, plus 90% to a small handful of wholesalers that pay for order flow. And what's more, this segmentation means that institutional investors, such as pension funds and others, don't get to interact directly with that order flow. This segmentation, which isolates retail market orders, may not benefit the retail public as much as orders being exposed to order by order competition. And some have suggested, I've heard it, that the segmentation with the isolated segmentation allows retail investors to receive slightly better prices compared to the MBBO. But as I mentioned, the MBBO is not a great measuring rod. And what's more, this price improvement doesn't say that that's the price improvement that would be available with full order by order competition. So it's not necessarily the best price. It's just price improvement versus actually a measuring rod that's got a lot of gaps in it and doesn't necessarily have the full benefit of order by order competition. So I've previously discussed the MBBO, but in addition to that, I've asked staff to make recommendations for the commission's consideration around how do we enhance order by order competition. Now, this may be through open and transparent auctions or other means. It may be saying that investors get the midpoint or better, and then there might be this auction mechanism. If not, We know that the listed options exchanges have operated auctions for retail orders for many years. I've asked the staff in consideration of any recommendations for cash markets, stock auctions, to draw upon the lessons from the options markets and focusing on how do we assure full competition amongst all market participants to provide the best prices for retail investors. Last, let me close on a topic that's probably also gotten a fair bit of discussion, payment for order flow, and I think the related exchange rebates. And of course, there's access fees related to that. Payment for order flow can raise real issues around conflicts of interest. Exchange rebates can as well. As described in the Commission's settled enforcement action against Robinhood in 2020, payment for order flow can distort routing decisions. Certain principal trading firms seeking to attract Robinhood's order flow told them that there was a trade-off between payment for order flow and price improvement for customers. And I would note, not all brokers pay for order flow. And many have said, well, what about zero commissions? There are zero commission brokers that are not paying for order flow. So zero commission doesn't mean zero cost to the retail public. And it comes back to how much of the price improvement is being shared with the retail public versus staying with the wholesalers in the dark markets. So as the staff reported in the GameStop report, payment for order flow may incentivize broker-dealers to use digital engagement practices, another project of ours, gamification, to increase customer trading. The European Union is actually actively considering banning payment for order flow, joining other regulators from the United Kingdom, Canada, and Australia. Exchange rebates, as I said, also present conflicts because exchanges give rebates to traders, and in particular, high volume traders benefit more from these arrangements than lower volume traders. And we often talk about high volume price discounts, but here we're getting a lot of orders routed through the biggest market players that small brokers are routing through large brokers trying to get some of that discount, and the large brokers are getting to see that flow and getting discounts and the like, leading to greater concentration, I would note as well. So just like payment for order flow presents a conflict, routing of marketable retail orders, exchange rebates may also present conflicts. So thus, I've asked staff to make recommendations around how we can mitigate the conflicts with respect to both payment for order flow and rebates. And one thing I've asked them to consider is whether exchange fees, what somebody pays to access the quotations on the exchange, and rebates should be more transparent, just making them even more transparent so investors can understand these amounts at the time of the trade execution. Finally, I've asked staff to consider how the access fees might change in light of the potential lowering of minimum tick size. Minimum increment, a penny. Access fees right now, 30 mils or 0.3 of a penny. That proportionality, what should happen with that? If we reduce the minimum pricing increment, it may also be appropriate to reduce these access fees. Of course, that would relate to these rebates as well. So let me just say, Rich and audience, in conclusion, I think we at the SEC need to look for opportunities to freshen up our rules to ensure that America remains the gold standard of the world's capital markets. Nothing stands still. Technology is rapidly changing. And so we can't take our leadership in capital markets for granted. And we really fundamentally haven't updated our rules since 2005, other than the infrastructure rule and data that I mentioned earlier. And as they continue to change the face of markets, technology, business models, and like, we have to look out for the investors on the one side and the issuers on the other, and particularly retail investors, as there's more retail investors in the market than ever before. It's not clear, given the current market segmentation, concentration, lack of level playing field, that our current national market system is as fair and as competitive as possible for investors. I think we can do better here for retail investors. I thank you. And Rich, I turn it over to you.
First, Chair Gensler, thank you for addressing my audience here. What you just outlined is certainly impactful to a number of the wholesale brokers, exchanges, and e-brokers that are present. And I also just want to commend you for your commitment to keeping rules up to pace with the technology, which we know there's been a lag. So with that, I'll get into a few questions here, if you don't mind.
Absolutely.
First, you've outlined sweeping changes, which we just heard, and in equity market structure, you've emphasized this order by order competition. So could you give us a better view of what that order by order competition might look like? And then also, what wasn't expressly clear to me is payment for order flow prohibited, or would payment for order flow still be able to exist in this order by order competitive environment?
Look, I'll say this, Rich, I don't want to get ahead of my fellow commissioners or the staff. I thought it would be helpful, seeing that you invited me to this speech, to sort of put out there what we're considering. So on the order by order competition, it's really what I've asked staff to focus on is for retail marketable orders. How can we inject greater competition so the segmentation is not isolated segmentation? Right now, 2-3 wholesalers are buying that payment, buying that order flow, not competing order by order. Yes, there's some price improvement, but not as much as you can see in these 605 reports and other reports in terms of the realized prices in the market. And so injecting greater competition through an auction mechanism, learning, of course, from the options, what works, what doesn't work in the options markets, and other groups of staff are actually thinking about possibly what to do there. But I don't want to get ahead of that. In terms of payment for order flow and rebates, as I say, they present inherent conflicts to the market. 3 other jurisdictions and a 4th, a big one, Europe, is considering getting rid of them. So I continue to ask staff, what should we do there? But as we put this all together, we're going to put it out to notice and comment, and obviously hear from the public as well.
Understood. Thank you, Chair Gensler. The next is and you sort of alluded to this, many regard the U.S. retail markets as highly efficient and even the most efficient in the world, what some would say. So I guess the question is there any data to suggest that the auction process will be better or result in an economic benefit, or do you plan on doing any pilot tests? And just one last part to the question is, are you concerned that it could have an impact on the low pricing and nil pricing that the e-brokers charge?
Let me just say this. I think it's misleading. There's a cost to retail, to this current system. And the cost is that 2 or 3 highly concentrated market makers are buying your order flow. And though there might be some price improvement against a false measure, a poorly put together measuring rod, NBBO, that doesn't mean it's a full price improvement. And it doesn't mean that it's best execution. So I think if we put in our rule set, not just FINRA's, our rule set, and put some procedures around best execution, we consider put out to public notice real auctions. So it's still segmented retail flow. But Rich, think about everybody on the other side, institutions that currently cannot access that retail flow. Is that the best capital markets? And so that's what we're going to put out. And yes, we'll put it out with economic analysis. Yes, we'll look forward to the public weighing in with their economic analysis, and we'll have the lively debate.
Understood. A little bit on the same sort of questioning line would be, what is the timeline? We've heard the broad outline by you, but I suspect, you'd have to go to proposal, comments. So what is the real timeline behind what you're suggesting? And then would you be open to a roundtable to discuss, this is some highly controversial topics. Would you be open to a roundtable discussion, which the SEC has held in the past, and which—
Rich, let me just say this. There's lots of ways to get public input. We're doing it all along. Anybody who's listening to this and watching this, let us know what you think. This is not a proposal. This is a chair's speech. I'm not speaking on behalf of the staff or the fellow commissioners. I've said that up front. I really mean it. But weigh in, talk to us. When we put a proposal out, we have multiple ways to engage with the public. I feel that as a chair of this, it's a remarkable privilege to be chair, but I give speeches. I sort of lay out something. I try to say what we mean and mean what we say. We had a GameStop report last year, and we got a lot of comments in on that, informally and formally and so forth. So continue to engage with the remarkable staff at Trading and Markets and Division of Economic Risk Analysis. And of course, engage with individual commissioners as well and their offices. And if we get to a spot where we propose something, I can't prejudge that, but if we get to the spot where we propose something, we'll hear more. And whether it's roundtables or meetings, it's really important to get the public's input.
Thank you, Chair Gensler. One last question on equities, and if you don't mind, I have a question or two on crypto as well as fixed income markets as well. Because
gosh, I figured as much, Rich.
It's in my allocated time, though, Chair. So, first question, just last question on equities. You mentioned the SIP infrastructure proposal that was upheld by the courts, the DC courts, and that you'd pick one. I think it was the odd lot. About publication of odd lots. So what do you expect to implement the SIP infrastructure proposal in the broader outlines over the next year or so? Right?
Rich, I don't remember the exact dates that are in that rule, but it's now been upheld. Of course, the litigants will have to decide what they do, but there's a various serious that was a unanimous vote, by the way, at the commission 2 years ago, and it was to. It's basically similar to what I'm saying here. It's how to use the benefits of competition to drive greater efficiency in our capital markets. That was competition a bit around market data and driving some efficiency in that infrastructure rule. But you're right. I did mention two aspects. The definition of round lot and the inclusion of odd lot data and core data that I've asked staff, should we go out to? Again, it would be notice and comment rulemaking, but notice and comment to accelerate those two aspects earlier, along with the other potential reforms I'm talking about here.
Great, thank you on the equity. Now, if I could follow up on crypto, these are general questions, Chair. So just recently, a bill, I believe, has been floated by Senator Loomis of Wyoming and Senator Gillibrand.
Senator Lummis.
Lummis, excuse me, and Gillibrand of New York, sort of broad outlines of regulation for crypto. And I guess the question is, first, what's your broad impression? Second, just, if you can't answer that, which is doubtful, but what's your overall view on the need for regulation in crypto? And then how well the bill, from what we understand, divvies up responsibilities of regulation to both the CFTC and SEC. How well do you think you can work together to actually execute on regulation of crypto?
So there's a lot you packed in there, and I've had good dialogues with Senator Lummis, and I've known Senator Gillibrand for years, and certainly worked with her very closely in the Obama years. But whatever comments I might have, I'm going to share with them, not with you and your audience now. And I really haven't reviewed their bill. It was released yesterday. But let me go to a broader sense. Crypto, this speculative asset class, $1.25 trillion roughly dollars right now, does not have the investor protection that the public needs. And I would contend, if this field has any future, what the field needs as well. And there's three sets of big public policy issues It's investor protection, which the Commodity Futures Trading Commission and the Securities and Exchange Commission is kind of, our domain. I'll come back to that question. There's the issues of financial stability and money creation around stable coins and the like that the banking regulators, Treasury, we have some role in that as well, because many stable coins look like money market funds. Many algorithmic stable coins, really are under our Howey test, very similar to, securities or our investment contracts, what it's called. And then thirdly, illicit activity and how we guard against the use of these coins to circumvent the public policies around sanctions and illicit activity and ransomware and the like. So there's a lot going on here to unpack, but I would say most of the tokens, thousands of tokens, have an entrepreneur in the middle or a group of entrepreneurs in the middle raising money from the public, and the public's anticipating profits based on that. That's the core of a definition of an issuer-based securities regime. That's what the SEC was asked to do in the 30s, painted with a broad brush, Thurgood Marshall's words, not mine, to protect the public against sham and fraud. I had the honor to chair this CFTC, another great agency focused on derivatives, and particularly derivatives around commodities and so forth. Ours is an issuer regime, protecting the public when a group of entrepreneurs should disclose something to the public. And you're a research analyst, Rich. You know how important that disclosure is. And to get that disclosure, make sure somebody's not, lying to you, defrauding you, not trading on insider information. That's what we do well at the SEC. And so most of these tokens are actually, right now, I'm not prejudging any one of them, but right now, they're investment contracts, they're securities. And thus the trading platforms, the ones that you cover with great interest, some public, some private that want to be public, those trading platforms should come in, work with us. I've said this publicly, we're willing to think through how to use our exemptive authorities. And basically we've got these projects: registered crypto markets, registered crypto intermediaries, and yes, registered tokens. We are also looking very closely at the stable coins because, frankly, they look a lot like funds and how they're operating. And guess what? They're offering yields, and sometimes they call them rewards, sometimes they call them yield. That's a return on something. So we've got all these projects, but Chair Benham and I have talked off and on about how we do something, enter into a memorandum of understanding, because some of the tokens are commodities, Bitcoin being one of them. So there's a lot here to work with the bank regulators, work with Congress if appropriate, moving forward. I know I went on a little bit.
That's fine, Chair. If I had to echo anything from the management teams of the crypto companies that presented here today, is they just want clarity from a regulatory
Well, it's good. If you want clarity, I say this, and I can say your first names pretty well, but I won't, because I'm always told not to. But I know most of you, I've met with most of you, is work with us, come in, because otherwise it's just, you've got securities floating on your platforms and you're right now operating outside of the law. And that's what we have a robust examination and enforcement units. It's half of our staff at the SEC between exams and enforcement. But work with this and think this through. And I will say this also, some of the traditional incumbent exchanges that are not yet there, they're working with us. So the crypto exchanges that are potentially operating outside the law, it'd be better to work with this too. And I think you'd want to say that as a shareholder, Rich.
I would probably agree, Chair. So last sort of category of last question, I might have one follow-up, of course, but in regards to fixed income, in a recent speech, you outlined, how big the fixed income markets were, how important they were, in comparison to the equity markets. And, you highlighted post-trade transparency, the platform reforms, and resiliency. I'll keep this at a high level, But what was you outlined reforms in each area. We won't get into detail here, but what's your overall goal in trying to regulate, I guess, the fixed income markets?
I put it in a nutshell. I've been blessed to serve now 3 presidents, and it's a remarkable privilege. I'd like to be able to look back and say we made our capital markets even stronger. And I think of it in terms of efficiency, that in the middle, how we price and allocate capital and risk in our system. It might sound geeky, it might sound a little bit finance oriented, but unless we do, Rich, other countries will surpass us. It is part of our great success as a nation. We have a rule of law. We've got an innovative population. We've got so many great attributes. But one of the great attributes is this system of what I'll call transparent, regulated markets. And I think it's part of our geopolitical success. But I wouldn't take anything for granted. And when you see concentration and segmentation and lack of level field, as we see in the equity markets or over in the treasury markets, that we see so many times our central bank has to come in and basically hold kind of what I'll call the left tail risk, the risk that the market has jitters. And we had it in 2020, we had it in 2019, we had it in 2014. If you watch your history, you can find 3 or 4 events in the early 80s. You can find event after event. Can we make that market, the treasury market, more resilient? And then in the broader fixed income, more transparent. And so, yes, we've been working with FINRA and trying to revise the trace reports, not only to be shorter and more timely, but also to inject more relevant detail in the corporate bond market. And yes, working with our colleagues at the Treasury and the Federal Reserve about post-trade transparency in the Treasury market. But the single thing that sort of animates me is in this honor to be in this role is how do we sort of, in a rapidly changing technological world and a lot of global competition, how do we ensure that our capital markets in the middle has fewer economic rents, greater competition and transparency and efficiency, that the buy side can compete with the sell side in those fixed income markets and really compete? We get the principal trading firms, the high frequency trading firms, so to speak, registered so that but once they're registered, then there's more of a way they can compete in the middle, even with the prime, what's usually called the primary dealers. I went on a little bit, but it's all about trying to drive greater efficiency in a geopolitical competitive world.
Thank you. One last follow-up on the equity markets, because someone has brought this question to me. Would the auctions cover or preclude, say, large banks that have internalization of orders, that internalize a customer order with their own trading desk? Would they be included in this auction?
Again, I'm not trying to prejudge the staff and where we might come out and everything, but I thank whomever asked the question for the question, and I don't want to prejudge that. I want to thank you again and all your audience. I want to thank you because I know that you didn't start in a career in finance. You started at West Point, if I remember. And but we both went to Wharton. You're very analytic. We're analytic. We're going to look at the economics. And the reason I'm closing this way is we benefit if the members of a conference like this give us feedback, give us input. If we actually put something out on the equity markets, give us feedback. But of course, we've already put out a lot of things on the fixed income markets. We've put out things on shortening the settlement cycle. Give us feedback. Economic ground truths really help. Know that we have a little bit different role. We're representing 330 million Americans. You're representing your clients, your customers, your shareholders, frankly, your revenues. So we might have a little bit different perspective, but we really do benefit from the hard analytics that a guy like Rich Repetto is so good at, and the economics matter.
Chair Gensler, I want to thank you for your commitment to transparency. Thank you for your commitment to keep investors, there be plenty of debate, but keep people informed. What I would say, Chair Gensler, and if I respectfully call you Gary.
They call me Gary, of course, you have for years.
You've been a force as a regulator, no matter what job you had. So you've truly been a force, and I respect that. And I think there'll be debate, but we respect, your.
Okay, now we're back to normal. So, you guys, the SEC comments period is one thing that the community has not gotten on properly in the past. When they open up for comments on this, everybody needs to go in and type ban payment for order flow, period. Like every freaking ape needs to show up, all hands on deck, and blow up that comments period with ban payment for order flow.
And you know what? That's the perfect sentence. If you can't write anything else, you can write, please join in the rest of the world in banning payment for order flow.
And say please, too, exactly. Gary Gensler is a very egotistical, very process-oriented person. He loves his celebrity. That's why he made the recent video of him joking about the mean tweets he was getting. He is like the college teacher who's trying to make the class more learned. He wants to stroke his own ego by saying that he made retail investors smarter investors. So go in and fluff his fucking ego and say, look, you cocksucker, please ban payment for order flow.
One thing I think is so hilarious is that every time he gets in front of a camera, at some point he'll say, we are really driving towards making our equity markets more successful and work for everyone. And I'm just like, shut the hell up. You know what you're doing.
But you know what? I will say I can perfectly understand why he's known on the street as Mr. Clean. He just has that face that he's never walked outside of the line. Like he's never drawn outside of the line. He's never probably done anything that these guys have done in their lives, including having 2 martinis. You know what I mean? He just seems very on the straight and narrow.
I bet you he folds his socks instead of rolling them together in pairs.
Dude,
he's that guy.
That too.
And that's fine.
Evenly colors, or whites, reds, and blacks. They're all. Yeah.
And I
you should see my sock drawer. Jesus.
I bet you he wears white socks with black shoes too.
Probably.
I think that in the finance world, Wharton blows Harvard away by leaps and bounds. Mm-hmm. So I forgot that he had gone to Wharton. So I think he thinks he's better, probably, a little better than everybody else. And I'm glad, because he needs to put those Harvard boys in their place.
And PJ, Wharton is the good old boys club. That's where all these insiders that are destroying companies like Sean Goodman went, is Wharton. Citadel and other hedge funds and market makers go in and recruit these cats and start implanting them into companies. You can see a trend of it.
Every one of them, it's really just.
But what I'm saying, on the rung of who's better than who, the Wharton guys are better than the Harvard guys. Okay. And so if a lot of the Harvard guys are going after it, like the thieves that they are, like Kramer and with Citadel, Ken Griffin, I don't know who else went to Harvard. They all did. And then there's those few at Wharton that tend to keep their noses clean, or maybe not. I think it's just an interesting dynamic. I'm glad that he went to Wharton and not Harvard.
No, but he worked at Goldman Sachs, and he was the CFO of the Clinton campaign. So, it's not that he isn't this establishment goon just because he looks like a nerd.
Well, that's an interesting take too, I guess. Yeah.
So I did a poll. I pinned it up top, everybody. And this is going to go directly in the comments period for this whole thing that's going on. What we need to do, the DRS thing is moving really, really well. Everybody is starting to really pick up on it. Everybody's realizing it's not the gateway to hell through the Citadel doorway that some people tried to say it was. But this comments period thing is huge. If we get maximum engagement on this payment for order flow issue and talk about banning it, even from Canadian investors, our UK friends, Australia, everywhere, then Gary Gensler will have to take those comments into consideration and join with Europe, Canada, Australia. What kind of choice do you have when 4 of our allied countries have already banned payment for order flow and China has literally restricted Ken Griffin from trading in their country? That's not even a question anymore. Just crazy. Oh, go ahead, Saint Cat Lady. You can.
A couple of things. During writing off what you just said, I swear I heard him say all those countries, they were considering it in the EU or something to make it illegal. I thought it already was over there.
It is.
But did I hear him say that they're considering it over there?
I can't remember if he said considering
I
it or
heard
if
that.
he did, but
Yeah, he said they're considering it in the EU, and I thought, wait a minute, it already is illegal. We're the only ones that still use it, as far as I know. I don't know.
There's a couple countries that use it. I think Germany's one of them, and a couple more. But yeah, we banned payment for order flow a long time ago in Canada.
Okay, well, yeah, you're the one, yeah, because you're in Canada. I knew you guys didn't use it, but I just swear I heard him say in the EU they're considering banning it, and he said Australia, England, or whatever other countries, but that I thought already didn't use it. Anyway, whatever. The second thing is, on one hand, you say he likes to perform, he likes to be in front, and he gets a kick out of that celebrity feel. I would really like to respect him, but the problem that I have when you watch him talk is when a question gets put before him that he knows he's got to bullshit his way through, he gets this grin on his face like, God, get me through this question because I'm going to be bullshitting my way through it. It's never going to happen.
Too.
Huh?
He condescends to the question too. To the person asking it.
Absolutely. You know, and I don't like his smirks and grins, and it takes me back to the Jon Stewart thing. And a friend of mine said, he's probably just nervous. I said, bullshit.
Yeah,
That man has served before presidents. He's been in some tough cases before.
Oh, yeah.
And here he is smirking his ass off
He's just a
at
smug
questions
piece of
that mean everything to us. And I have a hard time respecting someone like that.
The fact of the matter is that just as we've found it, as it was retruthed by Trump, he said that a tip of the hat to the AMC and GME investors for exposing all of the Wall Street corruption on an unprecedented level. And that's honestly what's going on here is we found out kind of inadvertently, which again is like hilarious in its own way. We inadvertently found out that the entire system, the entire financial system is complete horseshit. And they're trying to like maintain their programming on CNBC, and they're still trying to say, oh, you should buy these stocks, the fundamentals are there, and these earnings are looking really good, and their EBITDA is looking much better than professional analyst projections. They're basically trying to hold the facade together so that people will still look at the TV and go, oh, okay, this is legitimate information. Because the second that people realize that, and like, a lot of people are, but I'll say the second that the slight majority of the country figures this out, oh man, then their whole thing that they've been doing with high frequency trading, with payment for order flow, with short and distort, with, opening up investigations into companies that they have short positions in, like that whole thing comes grinding to a halt, and then they're screwed because now people, again, just like with red pills, you ingest it and then you apply the lens to the history, to the past, and that's where you start to see all the horrors and be like, oh my God, they've been fucking doing this for decades, and they've been stealing trillions of dollars, and most of the wars and the economic crises and most of the objectively negative things that we've borne the brunt of is completely because of these fucks. And so I'm loving this, but obviously, you know, this is kind of a crazy thing to have to deal with, where we're like, oh, it isn't just that they're overshorting one stock. It's that our entire market is completely fraudulent.
Well, you know, one thing too that I just came to me while you were talking, I'm not sure how long the comment period is, what, 3 to 6 months, give or take, something like that. What it does, I think every time there's enough pressure on him to come before us and say, okay, we'll consider some changes.
Yeah.
This damn comment period takes 3 to 6 months for them to get their shit together and hide their shit.
60
And as far
days.
as I'm concerned, it doesn't take that long to say no more payment for order flow, because there's companies here already not using it.
Yep.
So it's a choice to use it.
It's
You
really
know?
interesting because we have 3 major points. One, Bernie Madoff is the godfather of payment for order flow, right? Everybody knows who Bernie Madoff is, got arrested for the huge Ponzi scheme and stealing billions of dollars, right? So Ken Griffin actively spoke out against payment for order flow while Bernie Madoff was in charge of it. And then Ken Griffin took it over. Now, Gary Gensler noted that 2 or 3 wholesalers control the majority of retail orders. 2 of those specifically are Citadel and Virtue. And they know this. They know it's happening. My main point on banning payment for order flow is it's not fair to the rest of the global markets that Citadel and Virtue and Susquehanna and Wolverine can use payment for order flow when other brokers are not, and you're not getting best execution, and it's not competitive. That's not fair for AMC and GME holders in Canada, in Europe, in Australia. He specifically said it's a conflict of interest, non-competitive. That right there, the rest of the whole thing he just did was beating around the bush. He has to approach this in a way where he's going to get enough public support and enough congressional support to do it. Because when they shut down payment for order flow, Citadel is absolutely screwed. Robinhood is absolutely screwed. Robinhood will lose all their revenue, and Citadel won't be able to front run trades, and they're liquidity locked right now. So if they can't front run trades, their whole scheme is up and they're going down. So he's just beating around the bush right now is all he's doing.
All right, let me ask you this. Do you think that he already knows what's going to happen 3 to 6 months and he's just buying some time right now? And all your market makers and all these assholes are like, oh, thank God. Just put the comment section out there, fulfill their little bullshit, and we'll be back to our bullshit here shortly.
That's why I'm saying we have to comment with so much enthusiasm and so many people that they don't have a choice to ignore it. Because once we do this and the comments blow up, you're going to see MSM start coming out and talking about it.
Yeah, and you'll notice that people like Ken Griffin and them are off, you know, putting out things into the news like Ken Griffin just bought a new house, or he sent this much money to this cause, and it basically flexing and going in front of crowds and doing talks just to basically try to pass off the facade that, like, oh no, everything's fine, like we're in control, everything is all good. But I think that self-evidently, if you just examine how the media reports on this, that there's something here and they're trying desperately to hide it. And again, it's I've said this in a past talk, but it's sort of like seeing someone in a play and know something about that character that another character doesn't know, and then just watching them try to like fumble their way and lie upon lie, and it's kind of just like is like hilarious and cringe and just like, wow, like you really think you're fooling people.
Yeah.
And so it just all of that on top of just how did high frequency trading and algorithmic trading even become like legal? Like the fact that is even set up.
It's illegal in some other countries.
Yeah. The fact that they can even have the mechanism to be able to spawn fake shares is just, it's comical. It's like who okayed this? Like, oh, it's for liquidity
Congress
reasons.
did.
Like, fuck you.
Congress did through lobbyists. So, what's up, PJ?
That's so corrupt.
Hey guys, you know what I was thinking? I wanted to piggyback off of saying Cat Lady. You know, it could very well be the comment section and everything could very well be just the opposite of what we think. I'm sure the hedge funds will go, or whoever, you know, Virtue Citadel will go in there and advocate against banning PFOF. But I think this is where Gary Gensler is going to take his stand and become known for the guy. He's got to become known for something, right? And he's kind of positioning to be known for the chair that helped retail. I mean, and this would be the icing on the cake for him. So who knows? And according to Ken Griffin, I don't remember his exact words, but he said that he couldn't really give a crap about payment for order flow and that somehow it costs him money. I don't know how. But who knows? I mean, I think this can go one way or another way, and I don't think it's going to go good for Robinhood or the payment, or the folks that continually engage payment for order flow. And like same Cat Lady said, 100% right. Some brokers do it and some don't. So why bother? Why have this elephant in the room that is the big controversy of 2021 and 2022 when you don't need it? So who knows?
For people who don't know that are in the room, payment for order flow is a method where some market makers like Citadel actually pay brokers to get the order flow from retail traders, and then they bring it to their marketplace, which then they can fulfill in any way they want. Basically, in that you're not getting best execution, and more than likely your orders are going to go through the dark pool. But the key to this is, and this is where Ken Griffin, he's such a bad liar. His bluff is terrible. They can front run the market by getting this order flow. Citadel is not just a market maker, they're a brokerage, they're a hedge fund, right? So all the data this market maker has is somehow making its way over to the hedge fund side where they can front run all these trades via their algorithmic trading methods. So it's completely fraudulent. Everybody knows it. Gary Gensler is walking the line right now. What he's doing is he's trying to figure out who's going to win. Is retail going to win out and the hedge funds are going to close down, or are the hedge funds going to win and is retail going to walk away? He's trying to pussyfoot to the side that he thinks is going to win as this is happening, as it's unfolding. He didn't pick a side in the beginning because he knew if he picked the wrong side, he'd go down in history as a failure and his career would be over. So he's slowly starting to lean into retail a little bit by doing this. And I will tell you, even if you don't like him or you don't think this is going to happen, still go blow up the comments section, because then we have registered public comments stating in mass that payment for order flow should be banned. It won't cost you anything to do it. So
I have to hop off for a work call in a second, but I just wanted to ask one more question. Is there any apprehension in the group that they might just say, look, we're capping it at $5,000 or $10,000 or something, because anything more would nuke the entire global financial system?
You talking about the squeeze?
Yeah. Do you guys see the government just straight up stepping in and just being like, yeah, we'll give you, like 1,000, 5,000, maybe like 10,000, but like we're cutting it off?
I think it would be the biggest mistake of their entire careers. I think you would see millions of people on the front steps. See, they technically can't do that because there's global shareholders. So if they capped it at a certain price, shareholders in Europe, Australia, and Canada would be cheated out of the laws in their market due to the mismanagement of the U.S. So there would be lawsuits flying around like crazy.
I hope so.
I think they need to let it blow up. They need to give retail the money so we can go back out and put it into the local economies to fix this disaster that's happening right now.
And I have some thoughts on that if you guys want to hear them, because I love these thoughts and I think they're better than MOAS. And I have never said them because I don't want you all to kill me. But so I don't believe that I don't believe that the government or whomever will let this go to $100,000 a share. I'm very sorry. I don't believe it. It would crush the economy, and all our attendees would be worth, like one of my friends said yesterday, $5, right? $1,000 would be equal to $5 if something crazy like this happened. What I think is that they're going to allow it to get to $400 or $500 a share once a year. And I think this because if this if this gamma squeezes or whatever it does, I don't know what kind of squeeze is going to happen coming up. And the price range that all the TA is pointing to is, 50 to $275, whatever it is. If that's the price range, and then they short it down from there, because remember, as they're shorting from there, they can make a hell of a lot of money on the downside. So they're shorting from there. And then suddenly, a year later, we're back at $10 and we all pile in again. I mean, if this is the case, how bad would it be if we could pull hundreds of thousands of dollars a year?
You know what my concern with that is, PJ? When
Tell
this
me.
thing kicks off again, you got to remember that most hedge funds have half the liquidity they did back on January 28th and June 6th. The whole market's in the gutter. So for them to try to come back in and reshort the position could end up a disaster to them. I think what's going to happen is AMC and GME are going to start squeezing again, and the government's going to come out and put a short sale restriction on the stocks, because they're going to find out that there's billions of synthetic shares out there, and they're going to have to clean those up before they allow any further shorting. They can't let this go on any further, because they've already dug such an insane hole that, just as a base, if there's 2 billion shares out on the market at the price right now, it would cost $30 billion to cover at a base price of $13.50 a share, right? That's without the exponential increase in price through supply and demand. $32 billion for, like, if they covered every share at once at the same price, it would cost $32 billion. Can you imagine $32 billion going into AMC all at once? Just that alone would take it above $500 a share.
Actually, yes, I would love to see that. I dream about that.
I would love to see that too.
Here's the thing, though. In reality, how it's going to work is they're going to cover $10 million, right? And then the next person that's going to have to start covering, the price is going to go from 13 to 20. Then they're going to have to cover $50 million. There's going to be an insane exponential increase in price because there are over 2 billion shares out there past the legally issued float. The only thing that could happen with this for hedge funds to find their way out is to be first out the door. It's going to be a race to the exit, because with payment for order flow changes, which is some brokers' main source of revenue and some market makers' main source of front running, their liquidity is going to dry up completely. So they're going to have to find the exit pretty soon. And I personally think there's still a little bit more downside to the market. So, Facebook and Twitter alone, social media, is being found out to have very, very bad revenue sources, which is advertising. And in that, with the whole thing with Musk and what we've all talked about for years, we're finding out that companies are going to slowly start pulling their ad revenue to those social media platforms because they're not engaging with true customer base. They're engaging with bots. So if that happens in Facebook and Twitter and Snapchat and those keep falling, that is a huge hit to these institutions that are holding them long, like Citadel. So there's no way out of this for them. Anybody can go. I actually had some notes written down too. Yeah, the auction mechanism they're talking about to try to fix payment for order flow is quite literally one of the most ignorant things I've ever heard. The payment for order flow in itself. Did we just lose like 100 people? Are you guys still here? Hello? They fucking shorted our Twitter call. You gotta be kidding me. You guys hear me? They just dropped our whole entire room. You got to be kidding me. What's up, YouTube? I'm glad you guys are still here. Jen, you there? Oh, Jesus. Can you hear me, April? Ridiculous. Well, I'm going to try to get back up. That's ridiculous. They dropped over 200 people out of our room. Absolutely insane. Absolutely insane. What's up, guys? Twitter dropped everybody out of the room all at the same time. My call was still open, but everybody got booted and nobody could talk. Freaking crazy. That's crazy. So anyways, we were talking about payment for order flow from the Gary Gensler feed. He pretty much beat around the bush. He was talking about changing payment for order flow through a order by order process thing. What's up, Juan?
Hey, Bubba. How you doing?
Yeah, we just got shorted big time.
Yeah, I thought so. I was just texting Hedge. I was like, I can't hear nothing.
On my screen, it dropped everybody out of the call except for 6 people.
Spence, was I one of them?
You were still up, but I don't know if you guys could hear me, but there was only 6 people in the call.
I think I was talking and telling him
You were there. You were there. Hedge was there. And I think April might have been there. It was like 2 other people. And I'm like, what's going on here? I go, uh-oh.
Yeah.
Somebody recorded his ass.
That's so frustrating.
All right, listen. I heard a good portion of your argument, and I love it. The question, though, that I have, if they take PF away, to me, that seems like that's going to chase a lot of retail traders away, because if they have to start paying $5 to $7 per trade, you might lose some things here.
So I'm going to answer that, because a lot of people ask me that, like, if PFOF goes away, you're going to have to pay for your trade. I remember having to pay $30 a trade to my broker, right? And trading in the complete dark. So being said, we have payment for order flow and those that engage in that. And then we have brokers that don't, like Fidelity, who I trade with till this day. I went from paying $30 to nothing and an app. So I think that we are not going to get charged for any trades. How can they? So say Robinhood stops PFOF and they're going to charge you $5 or $6 a trade. Would you use their app?
No, and that's the question that I have too. If this goes into like the auction type thing, what's the most that somebody would be willing to trade or pay to get your trade to go through? And then, are some of these other places that are going to be getting your trade, is Citadel going to start, putting fucking bullseyes on these people, because that's taking business away from Citadel? I know there's like a lot of tinfoil-y questions. I didn't hear if Gensler said, hey, look, we're going to take this away. The fee will be this, but everybody, if you're on a platform that doesn't charge it, that should remain the same. Did he mention any of that, or that's still like one of those open the air, we'll deal with that when we get to it?
Well, here's the crazy thing about it. If they take it to an auction house, all that's going to happen is Citadel's going to pay a little bit more money for that order flow. They make billions of dollars by front running the market. It's the only way they're still surviving right now. It's one of their major liquidity grabs that they have is that they can front run the market. And Gary Gensler talked about that in the past. He knows what's going on. Like I said, he's just pussyfooting around to try to figure out which side he's going to land on when this is all over.
Hold on. I gotta jump in here quick, because here's the thing that I think people aren't getting. And yes, payment for order flow is not good, but even worse than that is the OTC markets. Because while they're doing payment for overflow or payment for order flow, and they're getting better price, but it's off the market, we're paying what we're seeing as market price. They're filling however they want to fill it to move the price, which creates no price discovery. So I personally think the OTC is something that we should be concentrating more on and getting on the market, because what we're seeing as a market price and what they're differentiating between what we're paying and what the OTC market price is lacks complete transparency and creates no actual lit market price discovery.
And Kat, I think you mentioned something about Griffin making money or what he's charged. He's charged. It costs him, I think, 2.3 to 2.5 billion to use PFOF, but he makes an additional 1.4 to 1.6 a year off of. So he's making money off it. Although he'll come out and tell you that it's costing him over 2 billion a year to use this, but he won't tell you that he's recouping all that and making 1.5 extra cash.
The only thing that came out of what Gensler said was when he wanted to get rid of the rebates.
You guys still there? Or are we being shorted again?
No, I'm here. I didn't get that last question. I didn't hear it. I don't even know who asked it. Can you repeat it, please?
Was that
I think
the one, or was it Matt?
I don't know. I didn't see it.
I'll just go into it again. Payment for order flow, yes, no good. But at the same time, payment for order flow is creating competition in the OTC market, which is actually dragging the price down because it's not hitting the lit market. So we're buying lit market. We have no idea what they're getting them for on the OTC. And that's the spread. And that's where they're getting the rebate, the payment for order flows. I'm more concerned about getting retail trades on the market, on the lit exchange, and forget these side markets where they can, that's where they're stealing the money.
When you say OTC, do you mean dark pools and whatnot, off exchange?
Off exchange, not necessarily dark pools. That's where institutions, people get that confused. OTC and dark markets are two different things. Retail's not going dark, they're going off the exchange. And what that does is it since it never makes the exchange, it never creates exchange price discovery. And without the exchange price discovery, they control the price of the lit market, which is what we're seeing. And then they're trading them off the counter for whatever better price execution that they can get that we don't even see. So I'm more concerned, like, I don't mind paying 5 cents more a share or whatever to get it on the exchange where it's actually getting equated into the stock price.
Real quick, guys, this is just not financial advice, but on the 5-minute, Highcroft is extremely oversold and it's down hitting $1.30 again. MACD's starting to cross. I just bought more. Just saying. All right, go ahead.
So, given that, my point is the only good thing to come out of anything that Gary Gensler said, in my opinion, is the disqualification to take away the rebates. Because the rebates is where they're making the money on the spread and then kicking it back to the exchanger for putting it off the market.
So I want to ask you a question, if you don't mind. So when retail places orders, we don't place orders for AMC on the OTC. It may get directed to the OTC after we place our order. I mean, that's the impression I'm under. And the OTC is completely not regulated. You could do whatever you want on those private little desks in the back rooms of some brokerages.
Right. It's this total unlit market with their own price discovery that's non-transparent. We don't see the difference between what they're doing on that and what the market price that's on the exchange that they're telling us.
Right. So it shouldn't be routed at all to any other exchange but that which we traded on. And if it trades on the NYSE, then it should stay on the NYSE. And like, so from my understanding, if it trades on the NYSE, the only way it can trade on OTC is between broker to broker, right? So I don't think that we're going into we're purposefully going into ATS and trading it there, right? I mean, this is not a thing.
That's correct, but if they're using derivative margin against them trades, that's going OTC.
Yeah, but see that from my end, that's still not us. I mean, that's them. And can we? And will PFOF stop that? Like, maybe not PFOF.
PFOF's not going to stop off exchange trading.
Right.
That's my point.
Right. But the plumbing of that, like, how do we avoid? I don't know. I mean, I just don't know how we avoid off exchanges if it's not some rule. I mean, and the way of way we avoid that is to trade it directly into an exchange. Like,
right, but our brokers aren't going to do that because they're getting PFOF and the market's paying for the PFOF and then they're getting the rebates. And I don't think PFOF gets rid of that, because if the broker collects $6 a share, even without the PFOF, they're filling off OTC for $5 a share. I mean, they're keeping the dollar anyhow, and that's not PFOF. That's just spread difference from your broker to the trade. Now, if we're paying $6 a share because that's what the exchange is showing the price is, and our brokers are putting it on lit, then they're paying $6 a share.
Yeah, I see what you're saying.
Now, if they want to hold it for 2 days and see if the price comes down 20 cents, then they can make 20 cents spread on the 2-day execution. And that would be their payment. But then they take on the risk that it don't go up 20 cents and they're paying 20 cents more.
It just seems like a heck of a lot of work to route it like that. And I understand they would do whatever they want or whatever they can to, ease the blow of this trade. But yeah, I guess that would take a whole new slew of regulation. I don't know.
I know if they ban payment for order flow, Ken Griffin is going to lose a large majority. Virtue and Citadel are going to lose a large majority of their power to front run the market. They want the order flow because they can see what's going to happen, but they know how many retail traders are buying into what stocks at what time, or more importantly, which options they're buying into. They pay more for options flow than they do anything else.
Well, the biggest thing is they can influence the price before they execute our trades anyway.
Yep.
So, like, if they know that 5,000 retailers bought a share each, it's 5,000 shares, and the market price was $13, but they can knock the price down to $15.80 through undisclosed, untransparent short ladders, and then fill us for 20 cents less, take the rebate, do the PFOF back to our broker. Everybody's making money, and we're down 20 cents before we even got filled.
Can somebody DM Jay Brown and see if his call got shorted too? They had a big room too, and I don't see it up anymore.
Yeah, I can.
Jubin's room heard everything.
What's that, Keith?
I was in Jubin's room or Jubin, and we heard everything. But hey, what gets me is we got the fucking rug pulled out from us, and y'all were talking about payment for order flow when the very first thing out of his mouth was dark pool. And then he switched to 6 rules of payment for order flow, something we know all the fuck about.
No, we need a 70,000 page signature letter saying, hey, we're not some unsophisticated motherfuckers that you're going to pull the rug out from under and talk about dark pool and then explain payment for order flow that we know all about. We're idiots in here talking about payment for order flow. We know all about that. I want to hear the dark pool, Mr. Gensler. I'm not unsophisticated. I'm not a fucking idiot. I know what the dark pool is, and I know what payment for order flow is. And you just tried to bullshit me with your fucking lies and pull the rug out from under me and tell me you're going to talk about dark pool and explain payment for order flow. So yeah, y'all are some unsophisticated people in here letting that shit go right over your head.
Yeah, I don't think you need to come in at people because we're having a conversation on another.
I know, but I mean, we need to get our shit together and realize what he just did to us.
We everybody in here understands what happened. I've got multiple messages asking me about where the dark pool information is. The thing is, we've already done petitions for dark pool stuff. We've already got that going in the works. My main cause is in this room, when they come up with the comments period for this payment for order flow change, everybody needs to blow up the SEC comments period. We can't just let it go on. You need to blow it up. You need to tweet what you said. And then just like the poll I just submitted, we need to put it out in the general public. Something so big, general public, that disagrees with payment for order flow that Gary Gensler can't ignore it again. We'll have registered SEC comments in there. So they'll have to address it.
Hey,
yeah, like you said, I believe we honestly need to get a hold of Jay Brown and, hey, let's have another meeting if that's what it takes. Get another 70,000 signatures and say, hey, we don't like how you just treated us again. First you come out with your stupid ass commercial, and then you come on here as a smug asshole talking about how unsophisticated we are, and then pull the rug out from under us and switch the whole topic.
And I think people are misconstruing too. That last petition was signed with them when they had the meeting with the SEC. If you were listening to anything he said at post meeting, he was talking to them about getting retail trades on the exchange, whether it be they're using dark pool or off the exchange OTC. It's not on the exchange. That whole meeting was to show points of execution where we're not getting price discovery because retail is not being traded on the exchange.
Well, yeah, it's like I call the Three Stooges, you know, they let go of your nose and poke you in the fucking eye. Well, that's what we just got. We just got poked in the eye because it's payment for order flow, it's the dark pool, and it's high frequency trading. It's not one or the other, it's all three of them.
Hey guys, so Jay Brown got back to me, and he just said that he closed out his call. So They weren't sure closed it out, so yeah.
Yeah, we got rug pulled hard on that one. What's up, Shay?
Hi. So I don't know. I don't know if we've all been listening to the same meeting. I feel a little differently about what I heard. I feel like a lot of the suggestions or solutions he said were kind of some of the things I felt like Dave mentioned in his We the Investor meeting with Gary Gensler. I think like some of the suggestions about banning payment for order flow. I know we talked about OTC off the OTC trading or off the exchange, where there's shares off the exchange. But I feel like that
You're breaking up, Shay.
OTC competition is what he was talking about instead of just having three major players. And that's fine, but it's still there's still a spread between that and market price.
Shay, try to go ahead again.
Yeah, I felt like that was, a step in the right direction. Might be like not the solution, but I think it's a step in the solution as far as limiting how much they make on the spread, and just kind of deterring, them trying to make money on the spread. the practice of just trying to make money on the spread, whether it's internalizers and all of whatever they do to make money on the spread. I felt like that was a kind of a small catch-22 that people aren't focused on, but might have a big impact. Another thing, let's see. Another thing is I feel like the things that weren't mentioned, like he mentioned, like the things that weren't explained is what I'm kind of focusing on, where he didn't go into detail of what best execution was and what outlining practices that the institutions would have to do in order to get best execution. They hadn't laid out what those practices are. And I don't know if it's, maybe they have some idea, maybe they're not saying it because it would shake up the industry. But I'm really curious of what those practices are. Maybe there are some of those practices that Keith was just talking about how they're, they're making money off of the spread and sending it to the markets. I'll be curious if those guidelines or mandatory guidelines for best execution would address those things. Just, I don't know. But I feel like the things that weren't mentioned are the things I'm more curious about. So that's just my 2 cents.
Here's my thought on this whole thing. If they ban payment for order flow, then there's not going to be any incentive for market makers like Citadel to come in and purchase that flow. So their market making potential is going to be limited. And in that, then you're not going to have large concentrations of retail orders being put through their dark pool. The only reason that they have those orders in the first place is because they plan on running they plan on front running the market.
Well, when they can short a stock down within 5 minutes at $1.50, that spread's far bigger than any PFOF that they're filling your price at OTC.
The point is Citadel obviously is a conflict of interest as a market maker. Even with the spreads, with the flow, where the flow is going, how it's paid for, it's all a massive conflict of interest. Orders should be filled on a direct lit exchange, period. When I buy a share from Fidelity, the order should go to a lit exchange that is regulated by the SEC properly without any types of conflict of interest. The whole point of this is Citadel should not be a market maker. They're a monopolistic entity being a market maker, a holdings company, and a hedge fund. That's what Gary Gensler needs to understand. I think the quickest way to end it all is to just ban payment for order flow. You will watch Citadel crumble into the dirt. Their market maker branch will go away. And this might be why Citadel is talking to Virtue and these other guys about setting up a crypto branch, because they know their days are numbered as market makers. It's just not good for the global stock market.
Spot on, Spence. Spot on. What you just said, spot on, brother.
What's up, Roberts? What's up?
I Harold Spartans. Ahoo, ahoo.
I'm gonna watch that movie now. What's up, AU? You had your hand up for a hot minute.
Yeah, just I'm driving, going to the hospital again. Just for a general appointment, trying to get some tests done. But hey, I just wanted to point out one of the things that he did say, and one that I hang my hat on, is read the filings and give an appropriate response to the filings, keeping it pithy to the point of what the filing is.
Yeah.
And making sure you understand what the filing is about. There's a difference between dark pools. There's a difference between ATSs and whatever other things that Citadel and Virtue and all their internalizers, whatever they call them, Citadel Connect. It's not really an ATS. It's not a dark pool, so it's not regulated by those regulations. Make sure you understand what you're commenting on and keep it to the point.
So in that too, when I'm going to go to when the comments period comes up, I'll make a tweet with all the information with a fast link to go there so everybody can get it done. But, don't think that your comments to the SEC are not going to be read or whatever. Even if you think that's not happening, the engagement that we show is important.
Totally agree. Like I said, you just got to keep it to the point. You know, they got action officers up there that have to read all the comments. And if there are outlying comments, you know, get rid of Citadel, dark pools it. They'll as part of public record, they'll set it aside and get to the thing that they want to look at. If you look at some of the comments in the past on what they asked for, they give you a roadmap. They ask you the question. You just got to give them the answer. They got specific questions that they're going to ask to get a response back on. They don't want you going on a diatribe everywhere else. So just read and make the appropriate comment and keep it professional. That's all I got.
Totally agree. I don't know who was first with the hands, guys. We'll just let Sane Cat Lady go, and then we'll get back to Keith and Matt.
Okay, I'll have one more and then I'll step down so somebody else can come up. But what is amazing to me at this point, I don't know how long Citadel has had their hands in so many different aspects of the market. The government wants, a portion of our government would like to break up Google, would like to break up Amazon, would like to break up, all these companies that are monopolies, Facebook, quote unquote, yet right under their nose. In our own financial markets, you've got one of the biggest monopolies in this country. And it's our stock market, our very way of life, right under their nose. And they're worried about flipping Google. And here you've got Citadel as a market maker, a hedge fund. They've got Citadel alone, regardless of their size on the surface. They might be a little bit medium or smaller, but they've got their hands in so many different aspects of it. They might as well be the biggest one. And it just amazes me how the government wants to waste our tax dollars and shit on breaking up Google when right under our nose, our very way of life is run and front run by Citadel for the most part.
Completely agree.
Hey, you guys, I just posted something from Better Markets to the top. Check it out.
You're 100% right, Sane Cat Lady. Last night I posted Citadel is the market maker in 6 different markets. So they're in every one of them. And I didn't really mean to come off that bad as the whole room. I meant as an AMC group. We need to keep our eyes on the prize and what he was actually talking about. Yes, we know payment for order flow is screwed up, and we can write letters about that. But the way he rug pulled us just now is really uncalled for, especially after, like I said, been making videos kind of smearing us, then calling us unsophisticated. I mean, honestly, I think I'm going to blow the fucking whistle on him, and I would drop my pants at the end of it and say, how's that for unsophisticated asshole?
One more quick thing that I wanted to bring up regarding the point I just made about monopolies. How do we get that on a petition? How do we get that to Gary Gensler that obviously this needs to stop? We have to break this up. He cannot run the entire stock market from 8,000 different offices that have 8,000 different uses. That to me is almost as important as payment for order flow issues.
When you've got 100 employees is all they had.
I'm sorry?
They going to invest? They only had 100 employees at one time. How in the hell are they going to investigate 1,000 different funds? They can't. They don't even have enough people to do it. It's ridiculous, like you said. The most important market in the whole world.
Gary, I don't know if he's getting handouts from Ken Griffin to turn his head. I really don't know how this can escape him when we do have the Google situation and the monopoly breakup discussions in this country that have been going on for the last 10 years. Okay. But how do we get that on a petition, or how do we professionally take that to Gary Gensler that he cannot have his hands in every aspect of our very way of life? It makes no sense to me.
I think you need to set up a petition in the way of the U.S. Congress, because what needs to happen is the U.S. Congress needs to charge them with antitrust. Then they can go in, they'll have to do congressional hearings. The only way you're going to break up a monopoly like that was with congressional approval. That's something that's, what they did with Microsoft back in the day and whatnot. So I don't know if whitehouse.gov petitioning is still up. But there are ways. More than likely what I would do is first I would write all your individual senators and congresspeople. Then I would start personally, me, I'd probably go to the whitehouse.gov website and start a petition there and have it sent to all those congressmen. And once we get over 100,000 signatures, which we'll get no problem, they're going to have to consider looking at antitrust with them.
Is there anybody that you know of or somebody that could work with me on getting that done? I don't have a job. I'm home a lot. I have no problem doing the work on that, but I need a partner. I need somebody that knows a little bit of the other part of it that could help me work through this to get this going. I feel it's that important.
Let me make sure that that petition page is still actually active.
All right, I'll step down. Thank you very much. And just DM me if you come up with any ideas, please.
Thank you. Good to hear from you. Thanks for coming up. Change.org, I think is what it is. No, it's not change.org. It's petition White House.
And always remember, change.org is a data grab. It doesn't hold up in court. It doesn't hold up for anything. So if there's a White House, if there is a petition that we can do directly linked to the White House, that's news to me, and that would be amazing.
Yeah, there used to be this page up that I think Obama had created it, where it was an actual full White House petition page. Can't seem to find it now though. Petitions. Maybe it was Trump. Petitions TrumpWhiteHouse.archives. They're all archived. So is this not a thing anymore?
Hey, Spence.
The Biden administration removed it. Jesus. What's up, buddy?
That antitrust charge against Microsoft happened back in 1998, I believe.
Yeah, it was when I was still in school.
Yeah, they were making it difficult for people to install competing software.
Yep. You had to use Microsoft, whatever their internet engine was. You couldn't like load up like Net Zero or whatever those other browser platforms were.
Yeah, overnight he went from $90 billion to $45 billion worth. They literally took $45 billion away from him by doing that. The government did.
I think the thing to do would be to DM Dave Lauer and ask him what is a petition outfit that would be not legally binding, but legally held up in any court or Congress. I think that's the way to do it.
So don't we have a lawyer somewhere? Because the best way to do a petition is by hand. To have a petition made up, we can send it around in discs, send it around to each other. We can take, even if each of us did our friends and family, 10 people, we would have millions of signatures at the end of the day, real signatures that they can verify. I always like to start like that because it's so hard to get signatures and then suddenly you're told they don't matter because they can't be verified. I think it's the best way is to people write their name, their address, their phone number.
Yeah, the White House petitioning thing has been taken down, which doesn't surprise me. What's up, Matt? Go ahead.
I just wanted to bring up something else that Gary Gensler talked a little bit about, and that he's working with the Federal Reserve, and how the Federal Reserve is assuming like the bank's risk through creating the liquidity that's allowing them to use the tax dollars that we pay the government to basically give the liquidity to the banks, which in turn gives it to the hedge fund. And I think that's a conflict of interest because there was an article, and I'll post it in my feed, but where Gary Gensler actually helped to write the Frank Dodd Act that created the reverse repo market that they're using against us to stop a squeeze and create a necessary bailout.
Yeah, I think using the same petition platform that Lauer did that got to the SEC that was noticed, I would say that's probably our best bet.
I wonder if we could reach out to Dave to see if he can draw a petition up for this. I'm sure he would be happy to.
I'm DMing him right now, actually. Because, he's doing the blockchain thing too, right? So payment for order flow banning would only help push his cause either way, so.
Now, are we doing it for payment, to ban payment for order flow, or are we doing it to break up the monopoly?
Oh, the monopoly. Yeah, I'm sorry.
Yeah,
The
okay.
monopoly.
That's okay.
Antitrust.
And this is how things are done by the people, we the people.
Yes, sir. I'll tell you what it's time for, though. It's time for me to get a new laptop, because when I try to type on Twitter while I'm streaming, it just gets all effered up. So, hey, Dave, the petition went very well. Had a question about if starting a petition to look at antitrust against Citadel by the U.S. Congress would be worth the effort. Thoughts? We'll see what he says. Usually DM's back, so. All right. What the hell? The price? What happened to the price here? AMC. Yeah, AMC's fucking rocking today. Either way, I fully expected a harsh drop off back down below 13. If we stick this out, I still believe they set options trap. Don't get me wrong. I still believe that. That's why I hold stock, because if it goes up, then I win. If it drops off, then I don't lose out on any calls or anything. But if we keep this up, I mean, we've got Boss Blunts who called the 14032. We're now talking about payment for order flow. We are riding the top of the year-long descending wedge. We're coming off of that. And funny enough, I took and charted out the June 6th run of 2021 on a line chart and overlapped it with where we're at today. And we're following that right now. We're starting our uptrend on that line, which, if it sticks with that, I'm not giving any dates and I'm not making any price predictions, but if it sticks with that tomorrow, theoretically by that trend, we would be above $14. So who knows, man? I don't know. It's holding up today. It's looking good. So I don't know.
All I know is that all the great TA guys, even if they're doing different kinds of TA, it all points to the same time frame, the same price range.
Yep.
And I love that.
And anytime it looks bullish, this is the thing with the TA on meme stocks. Any bullish trend that looks like there's going to be a breakup usually tends to be shorted and break down. But the problem is this time that there's over 23% short interest with a 14% cost to borrow on AMC, and market makers and hedge funds have half the liquidity they did last year. With the executive order going in, Bitcoin in the dirt, everything is lining up on this beautiful cycle, except we're 5 times stronger than we were last year. I'll tell you that right now. So this is looking beautiful.
And we know exactly what to do and how to do it. And I think that makes us even stronger.
Oh, can you imagine what's going to happen after this squeezes? When this blows up, it squeezes, and we all take our attendees and do whatever we're going to do. All of us going back in, whoever wants to go back into the market, the people going back into the market are going to be 10 times more educated investors than they were a year ago. And they're going to be running out into other plays. Retail is going to own the market after this is over. No hedge fund will be able to compete with retail's overall gains. It's going to be amazing. Top Gun. I'm going to check the box offices real quick. No, it's a really good talk, though, guys. I love everybody that came in and contributed to this today. PJ, good idea for the space call. And Jen, thank you for hosting. This was probably one of the more important videos Gensler put out, I think, personally, that we needed to watch, because the topics that are about to come up, the hedge funds are about to be busted anyways. So Gary knows that coming out now and attacking payment for order flow is in his benefit, because when these hedge funds break down, he can go back later and say, yeah, we were looking at doing this. We were on the ball, but we didn't beat the gun. You know what I mean? So he's definitely trying to polish his image. They've already got Jurassic World Dominion box office out. How is that?
Hey Spence, did you feel like, or anybody, did you guys feel like he was getting a little short with the guy who was asking the questions?
If you ask Gary Gensler a serious question, that's going to put him in a situation that looks like he knows it's happening, but he's not doing anything about it, he gets irritated. And he gets really very, very condescending to the person asking the question. So, like the Deadline, which is one of the sites I go to for box office numbers, more or less, is saying Jurassic World Dominion making tentpole serious again. Tentpole serious again, with running 325 million worldwide total by Sunday. So they think Jurassic Park's just going to clean up. What is Top Gun at? Top Gun has the least fall off of any movie so far. Top Gun Maverick has passed $600 million worldwide. Our Q2 is going to be so freaking insane. Okay, that's all I got for box office news. Floor's open if anybody has anything they want to talk about. If not, I'll go ahead and shut her down and everybody can go enjoy their whatever they do during this time of day.
Hey, I don't know if you met Jesse, but that's one cool dude, very intelligent, man.
Oh, yeah. Yeah, we love having him in here.
Love talking to you.
Nope, nothing.
Trying to get my child to take a nap.
Oh, Hank. Here's Hank.
Hi, hey, Spence and Jen, thanks so much for having the call. It was good to hear everybody's voices.
Yeah, good idea, PJ. Thank you.
I'm just glad PJ's not a co-host and trying to boot me.
Oh, come on, Hank.
Let it go. Jen, I'm glad you sobered up.
There you go.
I'm glad you sobered up tonight.
You better watch your back
call
now.
Today. Appreciate that. Just kidding. Robert and his Otto. Let's go. You got number 2 in here. Can't forget Spence. I don't like Spence.
Yeah, fuck you, Hank.
There's 5 YouTube subs. I don't like you because you have 5 YouTube subs. I don't like you.
Should I pay for my first 1,200 subscribers?
Please do. I'd have more respect for you then. What?
Hey, Hank.
Call Pete if you want.
Hey,
Shoot, I have somebody who wants to call Pete. Pete's not here, but it's recorded, so Pete can go back and listen to it. Call him out. Call him out.
No.
Call him out.
No.
Say hi to him.
Hi, Pete.
Yeah, Pete's not here, but whatever. Okay. I'd rather talk to Pete than me. So, you know, I go to counseling because you won't talk to me. It breaks my heart. I'm just kidding. I love you. She's all looking at me like, what?
Dude, my daughter just turned 12 and I texted her. I said, hey, you know, she's on summer break. I said, you can come over and hang out this weekend. And she just texts back, yeah. I was like, oh, great. I'm chopped liver now.
See, I'll just send her outside. She ain't got no phone and no tablet. Put her in the
Kennel?
Hey, you put yourself in the kennel. I don't put you in the kennel. Tell them I don't put you in the kennel before the cops come and get me.
Oh, that's funny.
Wow, she's just sitting there. Do I put her in the kennel? Yes or no?
You're in a kennel.
Yeah.
I heard her say that. I was like, what?
Oh, crap. You made PJ co-host. I'm about to get booted.
Yeah.
Right.
Oh, no.
I'm telling you, like, literally.
You better watch your back, Hank, before you end up in the kennel.
No, I just wanted to say I appreciate you guys. And it's been a cool day. Emotional day for me. I did go to counseling today. But things are... You focus, I don't know, focus on what you can control, and all the other stuff becomes white noise. And there's a lot of positive stuff with this community that's happening that I'm excited about.
I totally agree with that, Hank, man. Citadel can lick my nuts. If I get a DM back from Dave, or if I don't, I'll talk to somebody who can get a hold of him on the. I got it written down. Antitrust petition, and comments period on the SEC PFOF issue. And I'm going to try to tweet this stuff out to get everybody, like Hank said, focused on what we can do instead of all the nonsense white noise about what we can't do. So I think Hank just redefined or defined exactly where we should go forward with this. So
Tag the DOJ, Spence, on the antitrust.
Yeah, that's a good idea. It's a good idea.
Yeah. And then if you guys know any ideas for challenges or whatnot for like I'm trying to do different challenges for charity stream.
Prune smoothie.
I know that's on there. That's on there. I need more than that.
Prune smoothie challenge.
We already have one. So somebody bumped it up to 600 finally, and so we already got one. But I said the next 30 donations that I get for the Run for Doug thing. I'm doing stupid challenges, but I'll be doing them live on stream so you guys can see the pain as well. So
yeah, Spence, the challenge was for him to go to the store. He buys about a half a dozen prunes, or maybe a little bit more, and he comes home and he records, it goes live. He makes a prune smoothie, and he drinks that about 15 to 20 minutes before he goes for his walk.
Yeah, that's.
Yeah,
that's gonna happen.
That's gonna turn in for a run for Doug.
Hopefully, say the same thing. That's gonna be a run, not a walk.
Yeah.
Yeah.
No pain, no gain, Hank.
You want to know something that if somebody can do it, I'll be very impressed. It's an old challenge from high school. You have to eat six saltine crackers in 1 minute with no drink.
Child's play.
Good luck.
Hank,
that's what you say now.
On that prune smoothie.
You eat 6 saltine crackers in 1 minute with no drink, and show me. I'll be impressed.
Dude, DM me that so I don't forget it. I'll do 6 saltines after in a minute. I've done cinnamon's challenge before where you eat like a spoonful of cinnamon.
Spoonful.
That one's actually pretty fun. I actually like it because then you turn into a dragon that spews cinnamon. It's actually kind of fun. The one I hate though is habanero. Like eating a raw habanero. I usually throw up all the time. And then a gallon challenge. So I have it's 7 that I solid ones that I'll do, but I need 20 more. So just I don't even care if I get banned off of the platform I'm gonna be doing it on. So I'll do whatever. But yeah.
Hank, why don't you tell everybody what you're doing it for too? So there's people in here that might not know.
Yeah, so my dad passed on April the 29th of Alzheimer's, and he was 61, so I'm walking 61 miles, a mile a day. We're up 28, 29 will be today. And on June 21st, Alzheimer's Association, I looked in this organization. I know that your crowd has had a lot of animosity towards some Alzheimer's stocks. They're not affiliated with that, so I did my DD to make sure. But things that they also do is they have a 24-hour hotline in 200 languages, nearly 200 languages, for people who are dealing with Alzheimer's that just need to talk, need directions to go. It's Alzheimer's Association. The money goes directly to them. I'm not part of it. I'm part of it, but I'm not benefiting monetarily from this. So please do not send me any money. Don't send me anything like that. The link is on my pinned tweet where it has a link to the Alzheimer's Association if you want to give monetarily to that. And that's what we're raising money for. If you want to do your own campaign, you can actually join as well. But we're raising money until July 11th, which is my dad's birthday. But the 2 biggest dates for fundraising for Alzheimer's Association is June 21st. Or if you want to do it now, whatever, I'll add that to the list, and your name will be pulled as a punishment for me to do while I'm doing my walks and stuff like that.
Hey, Hank, thanks for doing that. My dad has Alzheimer's too. Sorry.
No, it sucks. I 1,000 100% behind you and totally understand it. The hardest part of this disease is you lose them before they're gone. And I was, you know, he wasn't who he was when I saw him in March, and I'm kind of like bittersweet that he's gone, but I was not prepared for what happened afterwards and stuff like that. So,
and I've used that hotline many times. They're amazing. So it's an amazing organization.
Yeah. So I didn't know about it. They actually have a person out here in Austin, where I'm from, where I live now, and it's really cool. Huh? You can tell.
And we called him before the day he died.
Yeah, we had his friend, because he was in Fresno, and so we actually got to FaceTime him his last day, and you got to tell him you love him, huh?
Oh, good.
So it's really meant a lot.
Aww.
There's more to that story, but yeah, we'll go in depth on it when I'm trying to drink a gallon of milk or the prune smoothie or whatnot. So it's for a good cause. You guys have done more than some of my own family, and I can't thank you guys enough. So I appreciate you guys letting me share that.
We did the truth or dare.
Oh, you want to do Truth or Dare also?
No, remember when I did it to you?
Yeah, you made me go to the neighbors and sing. So, and by the way, make them kid-friendly challenges, because Brindley will do them also, right?
If you're doing the 6 cracker challenge, make sure there's adult supervision.
Yeah.
I don't know what that is.
You have to eat 6 crackers in a minute and whistle.
Oh, I thought
That's
you were
it.
talking
Yeah,
about
whistle.
adult supervision.
Yeah.
With an old drink.
Yep. She's like, I'm going to practice that now.
Yeah, I don't. Good idea.
And they can't be animal crackers. They got to be saltines.
Yeah, saltines.
6 animal crackers is 1 bite for me. So that's
That means
the crack. What? What? These kids these days. Even square. She said, yeah, the ones with crack.
Hunter Biden animal crackers.
Yeah. Hunter Biden approves these crackers.
I would legit, if I owned an animal cracker facility, I would reach out to Hunter Biden to put him on the front of the box, man. This shit's funny. All right. Well, I've got. No, go ahead.
But don't feel bad if you can't give monetary to that. And if you guys go out on a walk, tell them what you want to see.
I want to see pictures.
All right.
Of, like when we walk. And
because this is the idea you came up with, huh?
Yeah.
Are we tweeting them on your page? Is that how that's working?
So either put #RunForDoug, I'll find them, or tweet them at me, and then I'll find them, and Brindley likes seeing them. So
my favorite is the one where the guy was at the beach.
Yeah, Joel. He was in Canada. Is it crazy?
Yeah.
Somebody was running for dad in Grandpa Doug in another country.
Is it?
It's insane.
Run for Doug with the number 4 or like the word 4?
The word 4.
Okay. Run for Doug.
So
there you go.
Yeah. So yeah, it's actually kind of cool. So like, if you guys do the fundraising and stuff like that, and you guys want to do that, you can actually join under my team, and they actually have prizes for you to raise and stuff like that. It's pretty cool.
The prize that I really want is the hammock. It's 1,200 though. I don't think we're even gonna get that.
She wants to raise enough money to get this hammock. It's funny.
1,200.
I'll just buy you a hammock. I'm just kidding. Maybe there'll be nice stuff, and we'll raise enough money because you're gonna suffer for this. You know that, right?
Hey, you gotta tell your dad take you to see Buzz Lightyear.
Yep.
Yeah. What movies do you want to go see?
I think your dad should suffer, and she should laugh.
Rise of Groot. Rise of Groot looks hilarious.
Do you like the Minions?
Yeah.
What am I supposed to? Is Jurassic Park tomorrow?
Yeah, tomorrow the double feature.
Okay. Yeah. Okay.
Yeah.
Yeah.
Let's fucking go!
Hey, also tell your daddy that you're so cute that he needs to buy you ice cream and candy and cake.
Yeah, we need some. Well, you know what you need? I think you need a Frosty from Wendy's, the new strawberry Frosty.
We just went to McDonald's.
Oh, it was the ice cream machine broke.
No, but they got the frozen Coke and a frozen blueberry drink, huh?
Really?
Yeah. So they have like a little icy thing.
Yeah, I'm gonna go get a Wendy's strawberry frosty today and see what it's about.
And it's open on the inside now. We went on the place.
Nice. I bet that's fun seeing other kids, huh?
Yeah.
Awesome.
We saw another kid.
Yeah, they've been in school, so she actually got to go to school with people the whole year, and then pretty much mask. Did you wear a mask most of the year or part of the year? Part of the year, yeah. She didn't even have to wear a mask the rest of the year.
That's good. I literally, if it was 1998 and they told me to go to school and wear a mask, I would have not showed up at school. I mean, I'm in a smaller hometown, but I would have just walked off campus and went home. Of course, 1998 was a rougher time, man. Let me tell you.
Shit. Did you like wearing a mask, or did it bother you, or what?
I don't know.
You don't know. She still got the flu twice while wearing the mask.
Oh yeah.
It's like, but. Do you think that was Michaela? No, that was you.
Oh.
You got the flu twice that one year.
Oh.
All right, everybody. Thanks for coming. Froggy Stonks. I'm going to close out. Thank you for watching. Please like and subscribe. I'll probably do another space call later this week. I'm going to go see Jurassic World Dominion tomorrow. Make sure you go to the movies. You are the investor and you're the consumer. GameStop. Go buy the equipment, the video games there, the merch, everything you can do. My dog wants to go outside. And I'm loving how bullish AMC is looking right now. So you guys all have a